Gold had a fantastic year so far. The market has created the biggest ever rise in 1 year. This is the biggest candle that has ever appeared in entire history. Talking about like all the entire visible history that we have on this chart. This is the biggest candle that has happened. So, what is happening right now? Is gold going to continue further up, or is there any chance for any kind of correction? Let's find out in this analysis. Welcome to this analysis of gold XAUUSD. Thanks for joining me here. My name is Vic. I'm the founder of Vikinsa Capital Management. Let's start from higher time frame as usual. As I said, like in a 12-month time frame, this candle is very strong candle and highly bullish candle. And this actually started a few months ago. If you look at the 6 month candle, I was expecting market to continue to to have some kind of correction from here, but that did not happen. However, the 6 month candle is still not over. It can still fall down a little bit or have some kind of correction. And the reason behind this, my expectation for correction here was that we had this trend line. Okay, if I join this point with this point, then we can have approximately this location for a correction. Another reason was that there are few patterns which were completing here. So one of the pattern completed here, and other one has just completed here. I'll show you that in a second. So that is why I was expecting market to have a correction here, but that did not happen. The market was extremely bullish and it continued to go higher. And if I show you the 3 months candle right now 3 months candle is where it has started to show a little bit of slowdown. Apart from that, before that, we have one, two, three, four candles, 4 quarters of highly bullish move. And especially this one, the last one has been exponentially very bullish. So what we can have is that this 3 month candle right now, it can close as it is. Basically the market can go into consolidation, and if it does that, you can see that this is kind of top sort of thing, and that may suggest that the market may have next 3 month candle coming down for a correction, just by looking at this candlestick pattern. And we'll have to see how this 3 month candle closes, because that will show us the trajectory for the next 3 months or 6 months. So just based on that, this is what it is. What about this trend line? If the market starts to show correction, then it can come down to this trend line for a retest. So that is still there. Let me show you what I mean. So this is the trend line that I was talking about. The market was supposed to take a correction from here. It did a little bit, but then market started to go higher. And in that, what happened here is it created another another pattern here, another extended pattern which has completed into this FCP zone, approximately around just under 2,700, and that's why now it has started to show some correction. Now this is a bit too early to say that the market is going to fall back down to this gap around 2500, or all the way down to approximately 2,300. It's still a bit early because we had only 1 week of price action where it was showing a little bit of bearish momentum. So if I go to the weekly time frame, you will notice what it has happened. The market was actually struggling here around this my FCP zone and around this where the pattern was completed. But then we had a breakout and the market continued to go upward to create a bigger pattern here. Now if I look at the just the weekly time frame and weekly candle here, this is a good bearish pattern that has emerged. The market has gone up, then we had a huge rejection, and now it has created a bearish engulfing candle. However, you will notice that this candle has not been able to close below the previous high here, which means that this area right now where it is standing, can still act as a support, and the market can still rise up. So that is why you should not just look at this particular candle behavior or candlestick pattern as completely bearish. Market is still bullish. So if you are taking shorts, then you'll have to manage your risk. You'll have to manage your trade. However, this is a good start for bearishness. The market has finally showed some kind of pattern. Now, this is what I have been sharing on LinkedIn and other places, that we had the similar sort of situation on Euro USD a few years ago, actually 14 years ago. Let me show you that post of mine, because you see the market runs in patterns, and this is the one that I was talking about. Let me show you this. Okay, so if I let me show you the chart. So in Euro USD, let me open the chart. Right. In Euro USD around 2006 and 2008, the market continued to rally up. And I'm looking at the weekly time frame on Euro USD, and this is also weekly time frame of gold. The market continued to rally up. It created this consolidation around the pattern completion, then it broke higher, then it started to fall down. This was the initial fall down. After that, it started to go back up, created a double top or created another high, and then started another fall. And this can very well happen in gold as well. The market has started to show some reaction or some kind of weakness here, but it can still go back up to create a double top or like a new all-time high around 2800, 2803, 2808, approximately that area, and then it can start to fall down. So do not look for a heavily short positions right now from where it is right now. This is still possible. These two patterns look very, very similar, so we'll have to see how it actually plays out later on. But this has started to show slight bearishness because of a bigger time frame pattern that has completed here. This one. Okay. Now let me show you another thing which is also very important. So if I show you another trend line here, see this, if I move my chart, if I switch over my chart to log scale, and if I join these two levels here, one and two, and extend them, what we can see is that market is sitting right at that trend line. It has in fact actually closed above that trend line on monthly time frame, and now it has come back for a retest. So this is kind of acting as a support at the moment, and that is why I'm saying that there could be push coming to the upside. Okay, because the market is still bullish, it cannot just start to tank immediately. However, there can be, as I said, there can be double tops or things like that, or divergence sort of setup, and then it can start to fall pretty much like how I showed you on Euro USD. Now, another thing that I will mention is that this is the level that I gave you last time when I posted on Twitter and LinkedIn, that this was a very important level. The market actually started to fall from there, but then it started to go up to complete the higher time frame pattern that I just showed you. And now the market has started to fall down from the another zone. So if I show you the daily time frame, what has happened there is that market has been running in this channel, and now it has closed below. You see this candle has been very, very strong candle. You cannot ignore these sort of candles. So this shows huge momentum to the downside, which means that market started to become bearish. Then it came down into this zone, went back up to the retest the trend line, and now started to show bearishness. This is exactly what I traded personally as well. So I've been posting this actively on Twitter and other places. Now, just before that, let me show you another thing, that whenever the market starts to show some kind of whenever these big boys or market makers, when they start to manipulate the market, what they do is they start to push out um, media reports or articles or blogs or interviews, those sort of things in the media. So what you should do is just monitor the media around that time. So October 13th, this is where I started to tell you that the market could be coming for a little bit of halt or correction. So October 13th, they started printing like golden times or gold fans. This was done on October 12th. Then October 14th, they started to show that drop could be a risky position. Then central banks make rare comments in the favor of bigger gold stash. Okay, October 15th, October 17th, even big hedge fund managers, Bank of America, all of these started to show that the market was going to continue to go up, and it did. But however, whenever these things actually come in bulk, you start to think in opposite way. And this is based on that, and based on technicals, I was able to take multiple short positions and manage them wisely. Again, then Tudor Jones again on 23rd of October started to say that the market was going to go up, and then it started, and immediately it started to fall down, and it kept on falling down. Then what happened after that? In on October 28th, they said the gold rush is happening and all of this, and then they said that cost of opportunity of holding gold is falling. BlackRock was saying investors are fear of missing out, and this is where the mania phases start. And this actually gave me a good opportunity to look for a short position based on that technical. So based on FCP analysis and based on these sort of inverse fundamentals, I started to look for short positions, and this short position has paid out very nicely. It was $120 short position. Okay, $120 fell by $120. Um, and since then, it has just been falling. It hit my target last week, and this was the result of that. the market kept on falling. I took a short all the way down to this zone. Why? Because this was a predefined zone based on my FCP analysis. And then what happened? The market started to jump up, went for a retest, and after the retest, it was supposed to fall back again. And that is why I took this short again. Okay, so original short is already running, and this is an air down, which is also risk free. So this is how you should be able to use the media to your advantage as well, and we learn that in FCP methodology. So let's go back to our charts, right? What we can have, what we can see right now. If I go to smaller time frame, the market has two possibilities. One is that market can, let me just change the color of it so that you can see it better. the, m- Sorry. Now what we can have is something like this, where the market could be going for bullish momentum. See, if the market does something like this and goes back above this trend line, basically reclaims this trend line and above this zone, then we can look for targets up to these levels can be very important for you. um, these, this is there on the charts. I will not going to speak them out. I will post the chart in our Telegram channel. By the way, Telegram channel is free. You are most welcome to join. It is called Vikinsa FX. So we have these levels which are going to be very, very important for the bullish scenario if the market continues to go further. Okay, and then if the market continues to fall and takes out the last low, which is around 2642 on this feed that I'm looking at on order feed, then what we can have is something like this. We can have an M pattern sort of thing. This M pattern can actually go slightly extended and then fall as well. And these levels will be very important. Again, I will post this chart on to the Telegram channel. So I will be very, very, very closely monitoring these levels and the price section around this area. So below 2643, we have these levels activated. Above the previous high, this mid high, or 2712 or 2733, above that these levels will get activated. So it's very, very interesting at the moment. I'm already in a short position which is risk free from here, and I'm already in a short position from here which is also risk free. So this is what we have on the gold XAUUSD. Hope you enjoyed this analysis, found this useful. Make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities, and I will be with you in the next one. Have a great time. Thank you for watching. Find and follow us on these social media channels.